QuickBooks Online 2021, adjusting entry related to unearned revenue or a customer deposit within QuickBooks. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our Get Great Guitars practice file. We're going to start off opening a few new tabs by going to the tab up top, right-clicking on it, and duplicate. We're going to do this 2 more times. Duplicate in the process by going to the tab up top, right-clicking on it, and duplicate. And then we'll go duplicate that again by going to the tab up top, right-click on it, and duplicate. And then we're going to be opening up the trial balance, then the P&L, profit and loss, and then the balance sheet. Going to the reports on the left-hand side to open up the good old trusty TB, trial balance. We're going to search for the find area for the trial balance. And then we'll range change it up top, ending at 022821. Running that report, closing the hamburger, holding control, scrolling up just a bit to get to that 125%. Next tab on over to the left, we're going to do this again, go into the reports on the left-hand side, opening up the P&L, the profit and loss, otherwise known as the income statement. Range change, ending at 022821. Run it, close the burger. And then we're going to go down to the next tab to the left and now open up the balance sheet by going to the reports on the left-hand side. Opening up the balance sheet, the BS balance sheet, going on up top and changing the date ending at 022821 and running that report, closing up the hamburger. We're going to be dealing with a customer deposit. We took a look at it in Excel last time and went over basically the theory behind it, so we're not going to go into that in detail, but we do just want to say it's going to be a little bit different than you would see in the book problem, in that in a book problem, you typically have the undeposited funds down here, and you would record everything into undeposited funds, and the adjusting entry would be determining how much of those undeposited funds have now been earned, lowering the undeposited funds, and increasing the revenue for the amount that has been earned. We have a little bit different of a situation here, one that you'll often find in practice, because on top of the issue of just reporting the accounts correctly, we also have the issue of managing the payments and connecting them to basically invoices and whatnot. And the easiest way to do that is to actually use the accounts receivable account, because the accounts receivable account is the one that has the connected subledgers related to it that help us to tie everything out. If we have a liability account, then we don't have that same connectability, that same subledger. Therefore, many times companies will basically record customer deposits with a negative receivable instead of a positive liability, so that they can track that deposit in the accounts receivable, which has the functionality to do so with the subledgers. So that's what we have here. Let's just take a look at that in a little bit more detail. Here's the accounts receivable. It is, of course, positive, meaning people owe us money within it. But if we drill down on the detail of it by customer, we're looking for those those negative amounts, payments that have been received for which we don't have an invoice or anything like that. Okay, so we're going to go to the tab to the right to do this. I'm going to right click on it. We're going to duplicate this tab, open up another tab. This time, customer balance detail will be the report that will run in this tab. So we're going to go to the reports on the left-hand side to do so. And then we'll scroll on down to like who owes you money area. That's right here, who owes you money area. And then we're going to go to the customer balance detail. Customer balance detail, I'm going to close up the old burger and then customize the date, because we want to have this report as of 12/31/21. That's our cutoff. Actually, that's not our cutoff date. 02/28/21, because that's our cutoff date. Run it. And then we can kind of double check that everything is in balance by going to the bottom here and saying, okay, is that 13,872? That should tie out then if I go to the balance sheet to the 13,872 here. The fact that we can tie those two things out, the fact that we have a subledger breaking this information out by customer, is the reason that when dealing with customers, we would like to put things through the accounts receivable account so that we have these reports in order to help out with it. So down here on string music, here's the unusual one. Here's the one this person has a payment, or this customer has a payment that has been made, but there's no invoice that ties it out to. Therefore, we have this negative deposit information here, a negative receivable. A negative receivable doesn't really exist. If you have a negative receivable for a particular customer, that's really a liability. Again, it works here logistically well because once we create the invoice, we can tie it out to this payment within this customer section. However, now that we're at period end and we have not yet issued the invoice, then what we would want to do periodically at the end of the month or a year to present our financial statements correctly is to increase the receivable here and record the other side to the liability, like something like unearned revenue. So if I go back to Excel, we can see we did that over here with a journal entry. So this is the journal entry that it would look like. We debit the accounts receivable, we credit unearned revenue. Here's the accounts that are affected by that. And it's fairly straightforward transaction, except this accounts receivable has, if I do a journal entry to it, then I might have an issue with the customers. Because remember, we always want to keep in mind the customers that are going to be involved, meaning in QuickBooks, anytime accounts receivable goes up, we do it with an invoice type of form. That's pretty much the only time the AR goes up. So if we increase accounts receivable with something other than that, we got to be careful on the customers that we're going to be setting up. There's two ways that we can deal with that. One is that for this journal entry, just for our presentation purposes, we may actually want to set up another accounts receivable account. This one not being an accounts receivable type of account, but rather an other current asset type of account, one that doesn't need a subledger, one in which we then do not have to add a customer to it, or we're just going to keep the current accounts receivable. This would be method number 2 that we will actually use, and then we'll assign the customer to it when we do the adjusting entry, and then we're going to have to do a reversing entry to remove it. This one will result in, if I go back to our ledger over here, it'll result in 2 more transactions down here, which will net each other out after they've both been recorded. So it gives but it can kind of confuse the bookkeeper a little bit, right? So it should just go in and out, not a problem, because we'll be back to where we started at. But you got those 2 kind of things that will be taking place in the customer balance detail report. Whereas if we were to simply make another accounts receivable account and label it as an other current asset type of account, we can avoid the customer balance detail reports altogether because there will not be one related to an other accounts receivable type of account. So for example, if I go to the left-hand side over here and we go into the accounting tab, we've got our accounts receivable right here. And if I was to add, I could try to add another account here and then select that account. So I'm not going to do it, but I could say new. Just if you use that method, then don't pick an accounts receivable account, but an other current asset account. Therefore, you don't have to deal with that subledger and you can just journal entry to it, not a problem. So now we're just going to enter the journal entry for it. Now we could try to use the subledgers here, but I mean the register instead of entering a journal entry, but sometimes the accounts receivable register can be a little bit tricky due to the fact that you need a customer for it. So because accounts receivable is involved with it, I will use just a normal journal entry, even though there's only 2 accounts that are going to be affected. So I'm going to go up top. I'm going to go to the new. I'm just going to go to the journal entry. The journal entry, entering the journal. That's what we do in the journal entry. And then this is going to be as of the cutoff 02/28/21. And this is going to be AJE8. And then we're going to pick accounts receivable. Accounts receivable, that's the one. And then I'm going to debit it for $300. $300. I'm going to say this is going to be an AJE8 for the name. Now I'm going to try to not put a customer in it and see if QuickBooks lets me do it. I think they'll stop me from actually recording anything if I don't put a customer name here. So I'm going to then say, so I'll just test that out and then I'll add the customer name. But then the other side is going to then go to unearned revenue. So sometimes if you're doing bookkeeping and you've never had this adjusting entry before, you might have to add unearned revenue. If you do, it's a liability account, an other current liability type of account. So you don't need any name here. I'm going to try to save it and close it and see if it lets me do so, or if it says, hey, you need a customer. So I'm going to say save it and it says, hey, you need a customer. I'm paraphrasing here. It really says something's not quite right. When you use accounts receivable, you must use a customer in the name field. So we're going to go, all right, I'll put a customer in the name field. So I'm going to pick the customer that was affected, which was String Music. String Music, I believe. Let me just double check that. It's in the subledger over here. We're going down here to String Music. That's the one. That's the one. Notice we don't really need the customer for our financial statement purposes. This is an internal thing that QuickBooks is trying to say. QuickBooks is basically saying, hey, look, if you let me post to the accounts receivable account without a customer, your subledger is going to be off, and that usually messes people up, so I'm not even going to let you do it. I'm not even going to let you do it. So we're going to say, all right, QuickBooks, that's probably a good idea. I don't want to mess up the subledger. So then we'll enter that in, and now let's check it out. So if we go then to the balance sheet, run the report again to freshen it up. We've got the accounts receivable now at the 14172. Scrolling down, we have our adjusting entry for the 300. That looks just as we planned it to do. And then we know that 14172, let's see what it looks like on the subledger over here. If I freshen up this report, if I warm it up in the microwave and go down. So there we have it. So now we've got the payment that happened, and now we've got the adjusting entry to kind of net that out, to zero it out. Note though that this adds this added level, because this thing is going to, if you were to give this to the accounting department, then they're going to be like, what is this journal entry that is increasing my accounts receivable? That shouldn't happen. Only invoices should be increasing accounts receivable. And we're going to say that's okay, because we're going to do a reversing entry like as of March 1st, and it'll net each other out. And so it'll be like it wasn't even there, even though there's going to have those two things there, but it'll be kind of like netted out, so you'll be back where you were before. If you don't want to do that, then again, you could set up another accounts receivable account. If you don't want to touch accounts receivable, and I understand if you don't, because you don't want to mess up these subledgers, then you could just create another accounts receivable with the other current liability kind of setup. So back to the balance sheet. The other side then is down here in the unearned revenue account that we set up. There's the 300. So now we have the positive liability instead of the negative receivable. So that's what we're looking for. We didn't do anything with this one to the income statement. So if I go to the income statement and run it, no change has happened here, because, and that's different than like a normal book problem. If you're doing an accounting course, unearned revenue, that's different than the adjusting entry you would do for unearned revenue in a book problem. Because remember, in a book problem, you would have the unearned revenue here, and you would be determining how much of that unearned revenue has been earned, decreasing the unearned revenue and recording the revenue that had been earned. That's not our problem here. Our problem here is just categorizing it between a negative asset for logistical purposes versus a liability, and then periodically making the adjustments so that we can report our financial statements more clearly and more properly as of the cutoff date. So that's going to be that. No change then to the profit and loss. Let's take a look at the one more thing on the balance sheet. Let's just tie it out to our Excel worksheet. On our Excel worksheet, we should have that 14172 here. So we should have the 14172. That looks right, and then the 300 down here in unearned revenue, which is of course what we just looked at. So let me just check it two times. All right, then let's go to the trial balance. And let's run the trial balance here. And this is where we stand at this point in time. So you can check your numbers with the trial balance. We'll also be printing this out if we remember to do so. So you can check your numbers on your own time as well.